things you need to remember. First of all, and you learned this in Chapter 18, but there are 3 different categories of inventory for Chapter 19 for job order costing. And so I'm just going to draw 3 different buildings so you can kind of visualize this. But first of all, let's say that we have a materials storeroom, and then we have a factory here, and then we have a warehouse where we're going to keep our finished goods. And so here, I'm just going to draw a T account for materials, and then once the materials move from the storage room to the factory, that's actually going to be called work in process. And as soon as they're finished, you'll take the cost of those out of the factory and you'll transfer that to your finished goods inventory. And I'm not a very good artist, but let's say this is our little delivery truck here. It's more like a train, sorry. And when we have a customer and they come and they buy our stuff, they buy some finished goods, then it's going to go in a T account called cost of goods sold. And so the flow will actually be materials. When you purchase those materials, it'll be a debit to materials and a credit to accounts payable when it goes into the material account. And then when the factory needs more materials, they're going to send a requisition order to the storage room. And you're going to take materials out of the materials T account and put it in work in process. And that's going to be your direct materials. But then also work in process is going to include direct labor and factory overhead. Then, as you finish a particular job, you'll credit work in process for the cost of that particular job, and you'll debit finished goods because that's going to go into your finished goods inventory. Then when you sell that, you're going to credit finished goods and you'll debit the expense account, cost of goods sold, to keep up with how much that particular product cost you to make. And so now we're going to go through the practice exercises for Chapter 19. And we're going to start out with practice exercise 19-1A. 19-1A reads that on February 8, Gross Company purchased on account 72,000 units of raw materials at $8 per unit. And the first journal entry we have to record is the purchase of that materials. And so we'll actually debit materials. I'm going to use the same little entry up here. Debit materials and credit accounts payable. And to figure out the amount, you would say 72,000 times $8, which would give you 556,000, which is the cost of that materials. And that's actually what would go in that materials count up here if you were going to put it in a T account. Then it tells you that on February 19th, raw materials were requisitioned for production as follows. For job 60, 32,000 units at $7 per unit. And for job 61, 37,000 units at $8 per unit. So when you multiply those out, you'll get $224,000 worth of direct materials goes for job 60, and 296,000 materials are needed for job 61 for a total of 520,000. The journal entry to record the requisition of materials to the factory would be, so here's your first journal entry up here. Your second journal entry will be to debit work in process, and you'll credit materials for the full amount, $520,000. Now, if you're doing a job order cost card, and in class, sometimes I'll just use a sticky note for this. This is for job 60. And this is for job 61, and you'll see these throughout the chapter. If there is a beginning balance, then they'll tell you that in the problem. But then what you're going to do with this chart is you're going to keep up with direct materials, direct labor, and factory overhead for this particular job. Because you'll have to apply the factory overhead for each job to come up with the total cost of that job. So right now you know that the cost of direct materials for job 60 is $224,000, and the direct materials for job 61 is $296,000. We can do by looking at these job order cost cards. And so it says at the end of February, gross company. Then in practice exercise 19-2A, it says during February, gross company accumulated 15,000 hours of direct labor cost on job 60. 15,000 hours. And total direct labor was incurred at a rate of $24 for job 60. And it also says that there were 18,000 hours of direct labor for job 61, and that cost of labor was $26.50 per direct labor hour for job 61. Journalize the entry to record the flow of labor cost into production during February. So the first thing we're going to do is multiply these out. 15,000 times 24 would be direct labor cost of $360,000, and we'll go ahead and add that to our job cost card. And 18,000 times 2650 is $477,000. So you'll just multiply these out to come up with that number. And then the actual journal entry here, and this is for practice exercise 19-2A, is a debit to work in process inventory, because the labor actually increases the cost of your inventory, and you credit wages payable for the full amount. So you're going to add those two numbers together to get $837,000. 19-3A talks about factory overhead. And it says, during February, gross company incurred factory overhead cost as follows. And so if you look in your book, the entry to record actual cost associated with factory overhead is a debit to factory overhead and a credit to all the different expenses. Indirect materials, so you'll credit the materials account for that, is $34,000. Indirect labor, which we will call wages payable, is $81,000. Utilities cost is $10,000. And factory depreciation is $61,000. So that would be a credit to accumulated depreciation factory. of $61,000 for a total factory overhead debit of $186,000. And that is to record the actual cost in factory overhead. In 19.4a, we're going to apply factory overhead for a specific job. When you look at the T account for factory overhead, you'll notice that the actual is on the left and the applied will be a credit to the right side. So you need to memorize that so that you can tell if it was under applied or over applied at the end of the problem. 19.4a wants you to determine a predetermined factory overhead rate using direct labor hours as the activity base. And predetermined factory overhead rates are always created by using estimates. And so it tells you that the factory overhead cost will be $2,200,000, and that the direct labor hours are estimated at 400,000. So you're always going to use estimates here to figure out that predetermined factory overhead rate. And if you think about it, when it's predetermined, that means it's determined before the actual costs are incurred, and so you determine that ahead of time using estimates. So the predetermined factory overhead rate, which is the answer to A, would just be the answer to that, which is $5.50 per direct labor hour. B, determine the amount of factory overhead applied to job 60 and 61 using the data on direct labor hours, and then prepare the journal entry. So we're going to look at the direct labor hours for job 60, which is 15,000 hours, and job 61, which was 18,000 hours, and you'll say times the predetermined rate of 550 gives you factory overhead applied for job 60 of 82,500, and for job 61, 99,000. Now I'm going to go ahead and add that up here to our job cost cards, where we keep up with the cost of the individual jobs. And then we're going to do our journal entry, which is a debit to work in process and a credit to factory overhead for the full amount, which is $181,500 for our journal entry.